Hello, everyone, and welcome to the Smart Investor Wealth Report Market Analysis video. Okay, before we get started, let me just firstly state that the Smart Investor Wealth Report is a service that has been in the waiting for a long time because you guys have been clamoring for information like this. So what we'll do is we'll provide a weekly market analysis video, all for free, and some investor educational tips, and also highlight markets that are profitable, because at the end of the day, the whole point of investing is to be profitable. So what we'll do is not keep you in the dark, where we'll show you markets that are profitable, and markets that have the potential to move much higher. And I believe that, along with the market analysis video and the investor education, will make you a much smarter investor and a more informed investor. We'll be publishing 3 times per week. On Monday mornings, you will get the market analysis video. On Tuesday, you'll get the investor education, and on Thursday, you will receive the case studies, where we will look in depth at markets that are producing profits for investors. If you have any feedback or comments, please send me an email at info@smartinvestorcentral.com. We have created this free service for you with a lot of feedback we have received from you or members. Okay, so let's delve right into it. We're coming up to the end of December 2017. 2017 has been a very good year for stocks, and the markets are charging to new heights as of Monday morning here. We see that S&P 500 is up on the day. It's clearly moving to new highs, as you can see here. The market is moving to new highs, and this December rally has borne true, because normally the market will rally in November to December, and that is what we're seeing here. Now, this rally is not large by any means, but the market is still rallying. And if you really take a look at these monthly charts, you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 months of gains in the S&P 500 or in stocks, which leads me to say that you have to be cautious at this level. You notice so many months up. We are due for a pullback at some point in time. The market will not go up forever, and you being a part of this publication, you being a smarter investor, it it it's definitely true that you recognize this fact. Okay, so S&P 500 moving to new highs. We should be hitting the 2700 level in short order. Resistance is psychological resistance at 2700, and support comes in at 2650, and longer term support at 2550. Taking a look at the Dow Jones Industrial Average, we see similar situation where the Dow is marching towards that psychological level of 25,000. And I guess if the market does hit 25,000, there will be much media hype with it. But the market is moving to 25,000, and let's look at a chart of the Dow. Similar situation as S&P 500. Other than we had 1 month in, I believe this was March, where we had a slightly down month, but the market has just been going up and up ever since March of 2016, as you can see on this chart, and we are due for a longer term pullback at some point in time. Just look at charts of the S&P of the Dow. You have up moves and down moves. It's an up move, it's a down move. Up, down, up, market moved down, and the market is moving up now. So, and we are due for a correction, and I believe this correction will happen around year end into January, February or so. So look out for that and keep that in mind. Taking a look overseas at the European markets, first to take a look at not the FTSE. Let's take a look at the German DAX. The German DAX is performing well also, albeit the market is below its all-time high that was made in November. The market is currently trading at 13,103. Support is at these levels just below 13,000, and resistance is at 13,500. Taking a look at the FTSE over there in the UK, we see the market, similar situation to the German DAX, where the market has pulled back and is still below its all-time high, near 7,600. And as you can see, 7,600 is huge resistance in the FTSE. And if you are invested in the FTSE, keep an eye on the 7,600 level, because we saw the market resisting that level in May, and also back in October, November, we saw the market fail at that level. So keep that in mind. And as I said, all of these markets are due for pullbacks at any moment. Taking a look at the US dollar index, the US dollar index has been fairly stagnant. We're still confined in this between these this area of 104, 104.50, and roughly this 91, 92 level. And the market seems stuck between that level. And until the US dollar index can really break out of this level, we are in for just more sideways action here on the US dollar. Notice the US dollar has been in a bull market ever since 2008, and we could get another leg up if we clear this 104.50 level, or if we start to move below 90. That will signal that there is weakness ahead for the US dollar. Taking a look at the gold market, and very interesting here with gold, where the market pulled back last week or the week before last, and found support last week. So we had this break of support. Let's just take a look at the daily chart. Market was finding support around these 1260 levels, and the market broke support and has rebounded, which is a good sign for gold. And as I keep saying, I believe that gold bottomed in November, December 2016, and is on a upward path. Now, I know there are a lot of folks that say gold is they are the permanent gold bulls, as I call them, and I don't believe you can be a permanent bull in anything. There's a right time and to buy and sell a particular asset, and it just so happens that gold seems to be in this moment at this point in time. I wouldn't say it's a firm buy just yet. I would look for some more confirmation, but this market is definitely looking positive for a longer term move to the upside. So we'll be keeping an eye on gold in the near future. Looking at the crude oil market, crude oil broke out, and I believe similar to gold, where crude oil, just taking a look at this weekly chart, crude oil bottomed in 2016 and has been moving up ever so slightly ever since. We're currently at around $57, $58 after bottoming out in near the $30 level. Now, the media hasn't really caught on to this stealth bull move in crude, but that's why we're here. We're here to pinpoint market opportunities and pinpoint the longer term moves that we believe are happening. Now, what we could see is a breakdown here to test the $52 region in crude oil, or even the $50 level. We could pull back to the $50 level, and I believe the market will find some longer term support for another move to the upside. So I would say crude oil is in a longer term uh, bull market. The market has bottomed, and I believe that longer term we are in for higher prices, even though we could get a temporary pullback, which will be a very good buying opportunity. And as usual, I will alert you to the fact. Now, another market that is moving upwards and moving upwards nicely is in the commodity space, and that is the copper market. We see copper moving up nicely. Copper, I believe, bottomed in this 2016 region, similar to gold, similar to crude oil, similar to really a lot of commodities where we saw bottoming action in commodities in 2016, and is moving up ever since. And this is a market to watch because there is huge upside potential if this bull market really starts to accelerate to the upside. Taking a look at some ETFs, ETF that did fairly well over the bull market in stocks that is trying to mount a comeback is IBB. The market, this is a biotechnology ETF where the market really skyrocketed between 2009 and 2015. Market made a huge move to the upside where we saw from $20 roughly to 30 to $130. So there was over 500-600% increase. The market has pulled back and is trying to mount a comeback. So if you are long this market, which I know a lot of people are, look for support in the $100 region and resistance above 100 and 113. If the market started to break down below $100, I'll be looking, and especially below $95. So anywhere between 100 and 95, if we start to breach those areas, then I'll be looking to exit this market because ever since that drop in 2016, we haven't. We want to make sure that the market continues its bull move, and yes, it's below its all-time high, but any move below 100 or 95, I'll be looking to exit because this could just be a reaction for a move to the downside. So keep that in mind. But if you're long, just to be clear, if you're long, keep your long positions below this 95, above 95. Okay, so that is really it for the market analysis video. Our whole point is to give you a broader outlook of what's happening in the markets, the macro markets, the macro trends that are affecting your investment. If you listen to this weekly update on a weekly basis, you will be informed about what's happening in the markets, and we're at crucial points in stocks. The next couple of weeks, the next couple of months will be very interesting in stocks, and it's imperative that you pay attention because what we are doing is analyzing the markets from an unbiased point of view. We're not looking at media hype. We're not influenced by any companies. We're just giving you unbiased information, what the chart analysis is telling us. Okay, thank you very much for listening, and I hope you enjoy the rest of our publications in the Smart Investor Wealth Report. And look out again on tomorrow, Tuesday, for another edition, the essay. Thank you, and I hope you have a wonderful day.